Hey, everybody, it's Pete Carmasino here at Chaikin Analytics, your chief market strategist. Thanks for joining me on the halftime show here on StockCharts TV. Each and every week, we kind of go over our system. We look at some power gauge setups and some charts using the ACP platform, and obviously go over to our system to show you, when and where there might have been alerts where you could have used our system, especially our rating, obviously, because it's a plugin on StockCharts. Obviously, it's very simple to do. Just go to the plugin section of your charting area. You can add it. It's a very inexpensive tool, but super effective, especially on some of the names that I'm going to show you today, where our rating changed, and obviously the trend continued and continued and continued on the downside. All right, and obviously this is a bad month. January's turning out to be one of the worst ones since the Great Financial Crisis in 2009, January anyway. And what we're seeing today, we're seeing obviously a nice rebound. The Dow's kind of flat. The S&P's getting a little spot on the upside, finding some resistance levels at 44.65. But again, that's part of the deal. You get violent sell-offs, you get big rips on the upside, and you got to kind of somewhere in between figure out which names you want to avoid. And obviously, if you want to be adding to any names down here, some good quality companies are getting oversold here. But at the same time, you're seeing some other names that have already been in a downturn way before January started that are getting a bit of a bounce today, obviously, because things do get way oversold. And we're going to look at some of those names, and one of the focuses is going to be some of the names in the ARK fund. And I'm not picking on Kathy Wood here, but I am looking at some of the areas where if the trends were changing, you can step back, wait, and then obviously get back in at better prices. Now, look, we love innovation here. Obviously, this is part of what we do, right? We're a technology software company. We love the idea of being able to communicate to you over, platforms like Zoom and other areas of communication. But at the same time, we're here to make money. So we want to look at some of the names, how they might have performed, and where you could have been alerted by using our system, our rating system. Okay, so I'm really picking on some names that got oversold here. Obviously, Affirm, the buy now, pay later type names really got to a spot where the RSI was way oversold. Look at the MACD. Starting to turn just a little bit on the upside. Obviously, it's still under the zero line, got a long way to go, but certainly didn't it find support down here right around that $50 level after hitting what was the high here, 176 and change. That's a pretty big sell-off. Obviously, names like Carvana that are dominating the used car market have also had their sell-offs. I mean, this was in the $400 range, about 375, 380, all the way down to $130 a share, right? So being alerted when these things change. Now, look, you can use moving averages and all of that. That's great too. But you're looking for quality, and you're looking for names to where the quality might be changing, right? Where the quality might be changing. You look at the actual setup here on the rating. You see financials and experts are as low as they can be on our system as far as very bearish. But technicals are kind of okay. They're not great. They're neutral, but certainly negative. And earnings have actually gotten okay. They've done okay. My point being is when the trends change, you got to be alerted to them. And names like Fiverr, right? This was the gig economy. Here was a name that started to break down back in this area around the $300 level, all the way down to $69 or so, right? Peloton, everybody knows and loves it. I'm a user of Peloton. I love the system. I think it's excellent. But at the same time, again, the stock started to break down and had some troubles, and all the way down to $22 a share. Names like Teladoc, again, I'm a user of it. I've had a few times where I needed it. It was excellent. What a great platform. But again, getting oversold. And even we talked about Zoom, one of the names that obviously we've all come to know and love from a product perspective, has obviously just, again, got oversold here around the 137 after hitting, I mean, it was as high as 450 or so. Okay. And so, with the charts, obviously here on ACP, you've got the ability to kind of squeeze them, look back a little bit further, right? You can go back and forth on the charts. And I think, it's such an excellent system, right? It enables you to kind of look at where trends are changing. But at the same time, when you add our power gauge rating, you're getting the ability to see the ratings change live, right? So let's go back and we'll start and look at Affirm. We're very bearish, even though the stock's been in a rally mode here off the bottom, right? It's hard to catch that falling knife. So I'll look at Affirm first here. And here's a name that we really didn't start rating until recently. However, I would say our relative strength was really the one that kind of started to alert us. So if you were obviously a subscriber to this system, would have been alerted and kind of been looking at the relative strength breaking down. But here's a name that is obviously bearish, very weak money flow, weak trend in a weak industry. That's, I mean, is it oversold? Sure, absolutely. Do you want to try to catch a falling knife? I don't think so. I mean, there's better names out there. Now, if you wanted to dollar cost average into this, and obviously we believe in innovation, we are innovators ourselves. Over time, this could be a very great long-term play. But at the same time, you had a huge opportunity cost if you stayed too long at the party, right? Losing $100 in value is never easy to do. So let's look at Carvana. Another name, obviously from the lockdown era of where we were, and look where our rating started to change. Really, it started to get bearish, neutral, and bearish somewhere around that September October range. Now, to be fair, it was neutral on the way up, but we've got an area where it dynamically changes. So if you're using our system and you see a rating go from bullish to what is called neutral, a few things probably had to happen. Obviously, some of the components that we use, right, in our factors had changed. And one of them specifically is obviously the stock has kind of closed under the long-term range, right? And when you start to see that, all these other areas, you have a lot of ability. You could build Chaikin money flow and use an RSI for your overbought, oversold on ACP. But that rating change right here around that 323 mark could have been an excellent opportunity to either start taking positions off the table or protecting them on the downside. All right. And it's really been negative and neutral, battling back and forth, but predominantly bearish. And obviously the trend was alerting you to that fact as well. Let's look at Fiverr. Again, we go back to the chart. You can see where it's very bearish here on the ACP platform. Big bounce today. A lot of these names are bouncing. I mean, look at the stock up 16%. Is it short covering? I don't know. I do know that this is a name that you should have been avoiding for a very, very long time. Here's where our rating changed. Almost a year of being bearish to neutral, but mostly bearish. The only times it was neutral is when it kind of peaked its head above that long-term trend. Again, we're price sensitive here. So if the trend starts to change from a price perspective, we want to alert our users. But at the same time, you got to be nimble and watch these overall ratings, right? Look at the negative money flow here. I mean, this one is a poster child for our rating, really. It really started to alert folks at around the 250 level. And what a great name it would have been to avoid or even protect on the downside if you use options or any kind of derivatives. Peloton, you're going to see the same story, right? You're going to see that stock selling off and ratings starting to change a while back, right? I mean, a while back, somewhere in the 120 area, $100 level is when it started to change, and it's just been predominantly bearish the entire way down. All right, that's where our rating comes into play. That's where you could start to use it to your advantage. Even not using our system here, just having the rating itself and using all the technicals that are available on StockCharts. Let's look at Teladoc and then Zoom, and then we'll close it out. Here we got obviously another pretty negative chart all the way down, right? So let's look at Teladoc on our system. Again, predominantly bearish. Now, look, it broke down, no doubt. It was up at the high. We didn't call the high at 295. But when our rating started to change right around here, around this $195 level, you could have been alerted to it. Now, the big change, a huge change, was the relative strength change, the way we measure it. And that actually occurred at around 261. And really, we were neutral on the name. We didn't even it wasn't even neutral positive. So right here, when this earnings report came out, our power gauge adjusted, changed it from a bullish to a neutral. That was while the stock was breaking down, obviously. But, you could really say between 195 and 228 is where we kind of alerted our users from a fundamental perspective, along with a technical perspective. Let's look at Zoom. Again, another name that's been, just had its rough patch, right? There's no doubt. had a bit of life here, right? Breaking above that long-term trend, but a double top formation, then breaking down again, and then finally breaking this level at 343. Our relative strength was obviously pointing us in the direction of a negative stock. But here's a name that was neutral plus, and this is important. That's telling you that the stock had decent fundamentals back when we were rating it back here. Okay. When I say decent, it means it's a bullish name that's just below its trend. But I told you we're price sensitive. So when the price breaks down and the market is out maneuvering or overriding our rating, we stay neutral plus and stay even neutral to a point where we started to change that in November, right around the $300 level. Right? Again, another alert that things were not looking well on the name. And obviously we went bearish late, but that's only because the fundamentals were still strong, but the stock was being sold. So you can't fight the market, right? The trend is your friend. If the trend's against you and you've got the name's getting downgraded and obviously continuing in a downward path, don't fight that trend, right? That's kind of the lesson of our rating here. If you go back to Zoom and look how it would look on the StockCharts platform, obviously we're bearish, but still financials and earnings aren't bad. Again, it's a good company, but the stock itself is having trouble, and obviously it could be affiliation in the ARK funds. Now we don't rate ETFs on this system; we rate them on our system. But let's go look at ARK real quick, and we'll close it out, looking at where the names started to change, or the rating started to change on ARK. So our relative strength broke down here. We were neutral on the name, so we downgraded it from a bullish to a neutral back in March, right around, we'll call it the 136 to 140 range. And then obviously it's been troublesome ever since. But our bearish rating was the predominant rating here. There were fits and starts here. The stock, the ETF had moved higher and tried to fight the trend, and the markets were obviously coming in, and obviously for good reason. Again, excellent, idea here. We love the innovation of technology, but we're trying to make money too. So at the same time, when the stock gets oversold like ARK did, an ETF in general, the names inside of this are driving the rating as well as the technical rating on the actual fund itself. But I'm saying if you had this system here, you could have seen that our rating really started to change about a year ago, right around that 124 to 130 range, and obviously stayed predominantly negative the entire time down. Okay, folks, thanks again for joining me on our halftime show here on StockCharts TV. That's all the time we have, and I hope you kind of got an understanding about looking at the past to see how the rating worked. A lot of people say, does it work? You go back and look at the chart. We can show you where we were rating the stock a year ago and how the trends had played out from there. So again, being price sensitive, the rating can change as it starts to break down below the long-term trend. But again, fundamentals were leading a lot of these ratings way out of the box and kind of moving to a bearish stance way before really the trend started to change. So we hope you enjoy this. Use our system, get the rating on StockCharts, get the Chaikin Power Gauge rating on your StockCharts platform. It's super simple to do and very inexpensive. We'll see you next week. Take care, everybody.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.